Section 16 of our training. In this section, we'll be discussing some trend signals, including the second consecutive against the trend and signals that go with trends. In the previous lesson, we learned about trends. Usually, taking a signal against a trend is very risky. But there are times when we can do this with considerable success, but only when some very important conditions are met. One of those conditions is called taking the second consecutive signal against a trend. This chart shows an example of a market downtrend that we can see part of on the left, coming down to its final low at about 1420 on the timeline, and then it starts an uptrend. Now let's identify the buy signal that occurs at the bottom of our downtrend. We've drawn a white box around our buy signal. Here's our double bottom in price, the higher low on the MACD, and the higher low on the DS. It's a buy signal by structure, but it's also the first buy signal against a downtrend, and by the rules of the methodology, we should not take this signal. However, something occurs a few minutes later that does allow for us to go long in the market. We've drawn a yellow box around another buy signal that is formed. The important consideration of this buy signal is its very close proximity to the first buy signal. Let's identify our second buy signal. The yellow line shows our double bottom in price. Below is our higher low on the MACD. And here's our higher low on the DS. Now pay close attention to this very important point. These two buy signals, which we've identified, have occurred so close together that they actually overlap, and they share a common low on the DS, price, and the MACD. Here's our common DS low, the common price low, and the common MACD low. They are all three common to both signals. The middle lows of the DS, price, and the MACD occur in both signals, and therefore we say that our second signal is consecutive to the first. Whenever we get a first against the trend, and then a second consecutive against the trend, we can take the second against. These consecutive against type signals actually have a good percentage winning average. Here is our confirming candle for our first against the trend signal, which we don't take. And here's our confirming. Now let's look at a chart showing the sell version of a second consecutive against type signal. The yellow arrow indicates our uptrend condition. Here is our confirming candle for our first sell signal against the trend. By our rules, we should not take this signal. Now, here's our second consecutive against the trend that we can take. Whether we are looking at the buy or sell version of this type signal, it's important that either the first or the second against the trend not be choppy. That is, one or the other must have more than 2 points of volatility or up and down price movement within the signal. If both the first and the second are choppy, we do not take the trade. It's always best if both signals are not choppy. But one may be choppy as long as the other is not. But in no case should our first or second against the trend be a choppy elbow. We do not use choppy elbows for this type of signal. Now let's look at another variation of this type of signal. Focus your attention on the yellow arrow pointing at the MACD. Notice that this MAC high is higher than our second corresponding MAC high that occurred at about 1250. Now watch the MACD high that the arrow is pointing to, and we will make it lower than the 1250 MACD high. See the difference? Our 1238 MACD high is now lower. This would mean that we wouldn't have a second against the trend in the conventional sense because the MACD made a higher high on its second high, which would have killed the signal. But the definition of a second consecutive against the trend is that the signals are so close together that they share a common high, and we don't really specify that that shared high necessarily be the middle high. Often, this shared high in the signal is the first high. To clarify this, let's label our three corresponding highs on this chart for the signal. Here's high number 1, high number 2, and high number 3. In our first example, we had a signal from highs number 1 and 2, and we had another signal from highs 2 and 3. But here we have a signal from 1 to 2 and from 1 to 3, because the DS made a lower high from 1 to 3. Price made a higher high from 1 to 3, and the MACD made a lower high from 1 to 3. That is, by definition, a sell signal. But it's not just a sell signal, it's a second consecutive against the trend, because in this case, it is sharing their three highs that we have labeled number 1. The number 1 highs are common to both signals. So don't forget, we can have a second against the trend from highs 1 to 2 and 2 to 3, or we can have a second against the trend from highs 1 to 2 and 1 to 3 type signal. The same rule holds for a buy type second against the trend signal. Another trend signal that you should know about is the signal that goes with a trend. This may very well become one of your favorite type signals because they do have such a high probability of success and they are so easy to see. Here's a chart of a downtrend. Whenever you see a trending condition in the market, you should always stay alert and watch for any signal that goes with the trend direction. We really mean any signal because even a choppy signal can be taken when it goes with the trend. Remember, in an earlier lesson, we learned that any two consecutive DS highs or lows have the potential to produce a signal. Here are two DS highs, one of which is an elbow. Here we find our corresponding candles to our DS highs. And these are the two corresponding MACD highs to price. Now let's put these together to see if we have the definition of a sell signal. Here's our double top in price, our lower high on the MACD, and our lower high on the DS with the elbow. By definition, that's a sell signal, and since the signal is going with the trend, we don't care if the signal is choppy. It must be a valid signal, however, but it does not have to be pretty. This is our confirmation candle to enter the market on our choppy elbow sell signal going with the trend. Now let's look at this chart showing an example of a buy signal going with an uptrend. We've drawn a circle around the buy. Here's our double bottom in price, our higher low on the MACD, and the higher low on the DS. And here's our confirming candle to take the buy signal going with the uptrend. Signals going with trends are probably the most enjoyable of all trade signals because they're almost no-brainer. If you can see them, you can take them without any regard to any other factors such as choppiness. Just remember that we must have a valid signal from structure. So be sure and check that price, MACD, and the DS are correct before taking the signal. This concludes section 16 of our training. If any part of this section was not totally clear, then we suggest that you review this section again. And if any questions remain, please write them down and we'll go over those questions in the online portion of your training. If you thoroughly understood this section, then you can proceed to section 17.